Good morning, beautifuls. Today is the 11th, Friday. Welcome everybody to the live stream. You're watching from Patreon, from YouTube. We're looking at the SPY 5 minutes chart. If you can hear me fine, see the picture fine. Here we go. Just give me a little bit of a feedback, and I'm going to answer this phone call and come back. All right, let's begin here, folks. Thank you for the feedback. And again, a reminder, you can post your questions on YouTube, on Patreon, or in the Top Guns chat channel in Discord. We'll catch all of them before the end of the stream. But let's begin here with the SPY. We had a little bit of tension earlier in the day, going back and forth, and that's the market maker's way to neutralize the options distribution, at least on one side, meaning they want to exercise max pain on one side, and then open the path for the real move that they're looking forward to. And it looks right now that it is to the upside. Now, does it change anything, let's say, in the hourly chart? Not really. Does it change anything in the daily chart? Not really. The odds would say that we're going to try to retest the highs of this candle again, but it's not really it's a toss-up. It's not really a strong evidence that that's going to happen. We need to close higher. We need to close above the gap here today to have that possibility, or at least close above the highs from yesterday. So we'll see what happens here, folks, but we'll look at the 0 DTEs, the distribution here, and see what they're aiming for. And if you look at the 530, this was the highest number of open interest. This is, of course, the highest volume, and it was already satisfied. So with 530 here, anticipating a ceiling at 530, unless we begin to see buying of these contracts above. Of course, there's a giant number here in 535, but you need to connect the dots, and you need to see buyers at the 31, 32, 33, 34 beginning to show up to push that tape all the way to 535. The other way you can do it is if the puts here begin to close, either the calls will add and bridge the gap to the 35, or the puts continue to close here all the way to 35 and push it all the way to that number. Now, look at this. Look at what happened here. The 530 had a big number of open interest overnight. 49,000. I mean, that's a big number for expiration. It's above the 33,000 that we have an open interest in the call side. But notice where the bar is looking. The bar is heading to the right side, meaning that they closed a lot of these 530 puts today. And as they did that, they probably did that because the market maker was kind of using the tape or pushing it in a jittery reaction to make them close and abandon this position right here, the 530. Okay, so the puts now abandoned 530. And they got no open interest going on here. They got no change in the open interest right here. The volume is still weak, and it's mostly for closing for these puts and the money. So now it becomes sort of a one-way street for the calls. And if we begin to see more call buying here, 535 is a possibility for today. And even if the puts begin to close, that could also bridge the gap to 535. So we'll see what happens here, folks. 530 is going to be a little bit, let's zoom in here to the 1 minute. 530, if we mark that down, it's going to be a little bit of a tougher point because that's the max pain for today. It goes at 530 as the market maker exercise max pain on both. But they're probably going to push it to 35, so we'll see. We'll give it the benefit of the doubt. If it doesn't lose 530, then 535 will be the next number. And after that, one step at a time, but we're probably going to talk about 540 because that one is a big number too. But one step at a time. We're not going to jump the gun. Other important charts like the TLT, you need to see the TLT bottoming. You need to see bond yields reversing down to get any upside in the market. So the TLT is a layer of confirmation. Today's rebound, you see that wick? Looks like a bottoming candle, at least to me, outside the Bollinger Bands. So if the TLT is indeed bottoming and the problem in the bond market may be going to be cooling off, let's say at least over the weekend. So clean this up here. you will see that the 10-year is getting to the upper Bollinger Band, so it is finding some resistance. If it pulls back, that's going to be a good sign for the market. So the TLT is another reflection of that. If you see the TLT moving up, that's going to be pretty good for the markets, at least in the short run, just to do a relief rebound. Now, in the morning brief, we talked about the cup and handle pattern. We got a pop, but now we're losing 4.5. And that's what the market needs to see. The market needs to see the 10-year yield not closing above 4.5, because if you trade above 4.5 for a long time, if you close above 4.5, going to be a big problem, because that's an algorithmic / a mechanical level that if you close above, a lot of calculations change across the market, and they change to the negative / bearish side. So here, going down below 4.5, that's a bullish sign, I'd say. And then we have, let's go back to the TLT here before I forget. There we go. Let's look at the VIX. And I want to look at the 2 hours chart just to make sure that there is no shift, that we're actually flipping to the downside. No confirmation yet, but it looks like maybe a bear flag pattern that's building up here. And of course, if we lose 35.82, that's my number, but we can roll it up to, I would say, this candle right here, maybe 36-ish. But again, it's in or around that number. If we lose it, then you can see the confirmation here in the MACD, and that's going to be another sign that the market is probably heading in a rebound in the next few days. And you have to concentrate more on the rebound bets that you got. Too early, though. It's not a final confirmation yet. Now, if we look at another indicator, BTC, I don't want to look into it too much because there's an impact of the dollar up a little bit, but that's, again, shows you that sentiment is improving a little bit. Then you look at the dollar index, and it looks like we found a bottom. We got a gap below the lower Bollinger Bands, just like the TLT. It's beginning to find its footing. So long as the dollar and the TLT find their footing, that's going to be pretty good for the equities market to rebound for a few days. But probably going to see another sign that you want to look forward to is a pullback in gold. You need to see all of that buying in gold pulling back to restore faith in equities and sustain the rebound for a little longer in the equities market. Now, HYG is something that we talked about in the morning brief, and I want to go to the 2 hours here, and you can see that we are maintaining 76. Got a retest here. The low was 76.02. We're maintaining the inverse in his shoulder, and if that plays out, another confirmation that the market is doing pretty good, at least for a few days. Gotta give it the benefit of the doubt to rebound. Another indicator that we talked about in the morning. Let's go back to the daily chart for crude oil. If we lose 58.76, we're going to have an inverse ABC, so we don't want to see that because that's going to be a restoration of the recession fears. But we are above for now. It's not the all clear sign, but it is a positive sign, at least for today's session right now. So you have this conflict of indicators being resolved toward the bullish side. If you read the morning brief, it's being resolved to the bullish side now. Whether that's going to change or not by the end of the day, I have no idea, but right now it is favoring the SPY to reach that 535 target. Looking at some of the big caps here, folks, Apple, anything changing in Apple here? Not really. Apple probably going to try to go back and forth with that 196 number. I think it's going to be hard for Apple to sustain a move higher versus the other stocks if the market rebounds, because you're going to have easier options with less exposure to China than Apple. But right now, it's moving along with the rest of the market. NVIDIA, on the hourly chart, I think we're probably heading to close that gap. So the close here would be 114. You want to go with the 115. If you want to go with the 115 for next week, that's okay. Naked 115. If you want to do the 110, 115, that's even better, but probably going to cost you a little more. You could do the 115, 120. I like that trade a lot better because we've retested 106.5. Caught support again, now moving above the wick of this hourly candle, all leading toward, and NVIDIA might try to close that gap, so we'll give it the benefit of the doubt that it could indeed close the gap. SPY reaching now, getting closer to that 535 number, and the VIX Look at the VXX here again. 2 hours already splitting and turning negative and forming the topping in a shoulder pattern. So if I had to guess here, folks, let's go to the E-mini futures. If I had to guess, I would say that we'll probably finish positive today and we continue to trade higher into next week. Maybe retest the top of the candle right here at about, let's say, 5,773 in the E-mini futures, and then earnings season. I think we're going to have problems with earnings season, but that's too early to talk about right now because they have to talk about the tariffs and the impact, and then the market might not like where the outlooks are going. But at least you're going to see neutralization of some of the shorting positions before earnings. The shorts will have to book their profits. So I'm not just thinking about it from a technical side. I'm thinking about it from a psychological side too. What the stakes for each player on the table look like. And if you were short heading into the earnings season, you made a lot of money, it's in your advantage to cover before that earnings season. Before we take your questions and comments, let's do the movers of the day. Texas, huge exposure to China. That's the loser of the day. Let's look at this chart right here. Daily chart. Whoops, that one is falling back. But that's huge China exposure. 80%, I believe. 80% of the revenue comes from China. So that's their problem. We see a lot of the banks. I mean, Wells Fargo. A lot of the banks were mixed. I would say that it solidified a case that if there is a rebound, probably JPM could lead a portion of that rebound because JPM's earnings were, I would say, pretty good. And if you want to bet for a rebound in the market right now, after the IV, the implied volatility went down because earnings are behind us, I think that JP Morgan will make a good options trade here to the upside. Now, the movers to the upside, MicroStrategy, that's Bitcoin rebounding, Fastenal reported earnings, pretty good. So we got to look at this report over the weekend, see what they said about the Taiwan imports, with the tariffs and all of that. Interestingly, of course, Mosaic moving higher, AMD, NEO, GDX, FCX. So a lot of China-related names are also moving higher, at least in the commodities side, maybe as a reflection of the dollar. We see the GDX, FCX, and Mosaic and Nutrient moving higher. GameStop, that's an options phenomenon. Yesterday, we've seen unusual activities. So again, it's a mixed picture here, folks, but tilting and leaning toward a positive close today. I'm going to go back to the SPY. Leave it at the 5 minutes. We'll watch it together here. We begin with your questions. Christina, John, the other John, Stone, everybody, MJ, thank you so much for joining everybody. We start with Bronco Billy. I was asking about the TLT trade yesterday and its structure. I thought everyone could use a little more information about it. I don't know if you missed it, Herb, or you missed it. Okay, something is wrong here. But anyways, I get the question. Question is, you got the TLT where I sold the 90 for next week. I sold the 90 calls, and I bought the 85. And I believe that I netted a credit of 2.8, 2.5, something like that. And the idea here is, since you netted a credit, your loss is not going to be triggered. Let's say it's 2.5. I don't remember exactly. I can check that out. But let's say it's 2.5. So you got, this is what we sold, 90. And the expiration date, you can mark it right here for the 17th. There we go. And then we received a credit of 2.5, so that leads us down to 87 and a half. There we go. 87 and a half. So as long as you trade above 87 and a half by the expiration date, at least you're break even or you're making profits. If you trade below 87 and a half, you're beginning to accumulate a loss, but that loss is limited to right here, 85, because that's the leg that we bought. So I would say it's not working ideally. I mean, ideally, of course, we should see the TLT above 90 right now, but it's working out according to plan here, at least plan B, if you want to look at it, which is a rebound from 85 and now moving higher trade above 87.5, you're good. You got the credit. You're not at a loss. You're not in an obligation. Of course, you'd love to see TLT heading closer to 90, if not above, by the 17th. But right now, so far, so good. I think that we had a bottoming formation here in the TLT, and we might continue to move higher. So that makes the credit spread a pretty good idea. You might actually start it today if you'd like. Play with the strikes all you want, but if you don't have it, you can start it today. And you see it in many other charts like the IWM too. So you have a lot of options of opening put credit spreads at this point with next week's expiration. I think these are going to be pretty good trades. Might give you more trades before the close, by the way. I'm going to think about it and look at some charts, and if I find some new ideas, I'll share them with you before we close. But here, we'll leave it at the TLT. SPY doing pretty good. So I hope that answered the question, Bronco. Mo, great day, Mav. Looking to get the SPY 460 calls, April 17th for today. Waiting for the price to hold over 530 and holding. What is the chain telling us? So I think it's saying that we at least head to 535, absent of the puts showing up all of a sudden, which I'm not seeing a lot of evidence of that. So, yeah, the calls here are not buying, and that's problematic a little bit, but they're being pushed above 530 because you have the puts here closing. So there is no resistance. So long they're not buying puts, we'll make it to 535. So I would say problem with the 560 is we really need a big pop next week. We need to retest that 557. We need to have a few more days of like short covering to get to 560 realistically. So what I would say, folks, that maybe the trade of the SPY 560 calls have to be closed. The trade has to be closed before the expiration date. Say Monday, we're trading at 545 or 555 or 550. I mean, 55 would be ideal, but 550. I think at that point, maybe the rationale would say take your profit from it and don't push it all the way to the expiration date. Now, there are strategies that we can play with it, so let's give you a visual here. SPY, and we got the 560, which is about 5%. Again, you're looking for a short covering move. You got to remember, we also sold a call here. We sold the 565, at least I did, with the expiration date of today, which is worthless. So now I can open something new here to reduce the cost of the 560. And that could be, by the way, going to next week and just opening the 565 and netting about $1 out of it. Let me look at my account here, see what I actually spent on it. I actually sold the 64. Yep, the 64 for the 11th, which again, probably going to expire worthless. So we can open the 65 for next week. That's what I'm thinking about. But let me check here. The 560, I did average down yesterday, so my average cost here for the 560 for next week is 2.18. I received a credit from the 564 that I sold at $1. So right now, I think the trade is in a pretty good position because the average cost is about 130, 120 if you factor in the credit that we received. And if you take another $1 off, then the entry cost has been reduced to 25 to 30 cents for this trade. So it's probably what I'm going to do today, but let's see how the SPY is going to trade. If it continues to go higher, then we can sell that 565 for more than $1, perhaps, and reduce the entry cost even more. At some point, we might just be trading for free. We trade the 560 for free. So that's my goal. Hopefully, the SPY will move higher so we can sell that 565. Okay, good one here. Mo, thank you so much. Let's talk about, hey, Mav, been waiting to add gold, palladium, copper, and China. Since the dollar did not go up, wait or chase. With the dollar, look, the dollar is probably bottoming, at least in the short run. That's what the evidence says because we got really, really oversold. So I anticipate a rebound of the dollar, maybe Monday, Tuesday. We see the dollar going back within the Bollinger Bands. And what's going to happen is it's going to give you the rebound that you're waiting for. It's going to give you, not the rebound, excuse me, it's going to give you the pullback that you're waiting for GDX or GLD, whatever gold ETF that you're looking at. But I would say be careful, because if things begin to look better in the stock market, a lot of this storage of value that investors went to, they might begin to pull that value out and try to buy the dip in the stock market. So it might be a case that you may be chasing gold futures a little Johnny come lately. But when it comes to copper, I think what matters to copper is right now, copper is probably going to make a better case because it already got crushed. So even if the dollar goes higher a little bit, you can see copper also trading higher based on the flush that we already got in the US dollar, if that makes sense. So between copper and gold, I'd rather go with copper, to be honest with you. And the other thing is, we're probably going to hear news about China's stimulus over the weekend before Monday's close. So that's going to be another positive for copper. The other thing is, China today did retaliate. So they have 125% tariff on all U.S. goods. But they said they're not going to retaliate anymore. Well, that places a ceiling on the trade war between U.S. and China. And at least we see some clarity in copper, which allows a lot of the shorts who got into here and they're still at profits to begin to cover their positions in copper. So I'd rather be in copper. I see more buying dynamics, more players on the table that are likely to buy copper than the ones who are going to buy gold, if that makes sense. Now, when it comes to China, maybe the stimulus news is coming. But again, if you want to play China, it is too risky, given the fact that we still have the tariffs. We did not have a resolution yet. So when you have copper and China, you have redundancy. You have to pick one of the two. And I'd rather for you to go with copper now, not China. We need to see a little bit more clarity in names like Alibaba and the Chinese names. And as far as gold, like I said, I find it hard to believe that it's worth chasing right now. At this point, no, I don't think so. I think it's going to pull back. Folks are going to try to chase the stock market a little bit. Then maybe after earnings season, when we begin to restore some fear, they begin to go and buy gold again. So that's my 2 cents. Excellent question again. Let's go back here to the SPY. Looking pretty good still. Stefan, you say that the SPY futures or the S&P futures look very bullish. Not very bullish, but they're leaning. I would say the odds right now over 60% that we trade higher. So I want you to concentrate more on the bullish trades that you got for next week, because I think we do a little bit of recovery here in the equities market before earnings. And you can think about it, okay, retail is not participating, maybe institutional is not participating, but I think the shorts will continue to cover before that earnings season. Hey, Mav, yen, CHF, and the euro were up almost 4%, some higher in 2 days. I opened a tiny position at the money calls for UUP, expiration date Friday. Or next Friday. Is it too early? No. You're not. You're actually doing a fantastic trade here, because the dollar got really, really oversold, and I think that you caught it pretty much at the bottom. And if you went with UUP, then you're gonna enjoy the rebound in the dollar. And next Friday is the ideal expiration date. That's exactly how I would have done it. So here's the ETF that tracks the dollar. If you want to trade the dollar, you buy calls in the UUP, or you buy the UUP itself, and I think that we're going to rebound maybe closer to 28, and then we'll see what happens. That is good timing, I would say. Ryan, thank you so much. Appreciate you joining us. Freeman. Hey, Mav, please share your thoughts about the outlook for Chinese market. I'm holding the FXI 30 puts for the 17th. Cannot understand why China would be rallying. Look in the FXI. Again, the reason that it's not really rallying by much, but I would say the reason is that we have a ceiling in the trade war. It is likely that the Trump administration is not going to retaliate more than this, because we have 145 on them. They got 125 on us. I don't think it's going to retaliate anymore. I think that's the ceiling from which we begin to negotiate with China. That could be a process that ends badly or ends with a good resolution. Who knows? So I would say if you have the 30 puts on the FXI, if you have any problems with China, yeah, it is worth keeping because you'll see a flush right away if there's retaliation, escalation. But I would say right now, I'm just looking at the pros and cons of keeping the 30 puts right now. And I would say that the cons overrun the pros because we have at least a visual of a ceiling in the trade war. I think that could encourage some folks to begin to buy the dip in the Chinese names, hoping for a trade deal to be announced over the weekend, next week, or at least China called something. So if it's up to me, I know it's frustrating, but I would take it off. You need a lot exposure to the downside, to the upside, like we said, but right now your put exposure has to be way longer dated than April 17th. So if you have puts for April 17th, the FXI, my 2 cents, if it was my trade, I'll take it off. Good morning, Mav. I'm still holding the SPY put debit spread for May 16, 480, 470. Should I keep it, close it, or roll it? May 16th, you have enough time, but again, if we have a movement, let's say 540, 550, by the time we come back down, your strikes are going to be way too far. So I'd rather close that trade and then wait for the SPY to come back down. Maybe it's going to retest the highs. Who knows? But I think that trade should be placed once we lose 510 because you're betting below 500 and the decay is going to begin to kick in, by the way. I mean, May sounds like a long time from now, but the decay is going to begin to kick in as soon as next week because once you go beyond the 4 weeks horizon, once you begin to go to 3 weeks and you begin to eat away that 4 weeks period, that's when the decay begins to hit pretty hard. So I would say here for the 480, 470, I'd rather that you close it and then reopen it later. Or if you want to roll it up, that would be the decision that I would make. But we have to see where the SPY is going to stop and stall before we add that trade. Because if we add it right now, let's say at 530, 520. If we do 530 and we sell the 520, by the time we rebound, who knows, we might go to 555 or 560. By the time we come back, I don't know if that's going to be enough or not. So we need to see a sign that this is reversing and then place that bet again. Now, if you had, let's say, 500 puts on the SPY with the expiration date of June, for example, I would say that's okay because it doesn't matter by that time. You might see a rebound all you want and then come back down. So if you have June, that's okay, the 500. But your trade here is holding a little bit of risk, more risk than I would like. Hey, Mav, how do you see risk holding over the weekend? Right now, we have good assumptions. At least the market thinks that things are getting a little better. So I think that it's okay to begin to nibble on these upside/rebound plays today and hold them all the way to next week. Lenny, what is the difference between buying puts in the TQs versus buying calls in the SQs? That's a really good question. There isn't a lot of difference, really. The only difference is in the pricing. So there could be sort of an opportunity in the mispricing of one of the other. But if you look at the April 17th, for example, let's say we buy the 40, which is about 14% to break even. You pay about 180 on a stock that is trading at 36. So one way, by the way, one way you can do it is, what are you paying for the price here? 180. Divide that by the stock price. You'll get how many times you're paying over the stock price for a options premium. And then you can factor in the break even and you'll see that it's not really pretty good risk versus reward, to be honest with you. Now, if you go with the TQs and you go with the puts, it's going to be, again, about 14% of the downside. That's 43. And then you look at 170 versus 48. You're still overpaying, but also the beauty of option strategies that gives you the chance of profit. So here it's 20%. If you look at the SQs, if you go back again with the 40, the chance of profit is 24. So there isn't a fundamental difference between the two. It's really up to you. which one you like, but the pricing sometimes favors one versus the other. And using a tool like OptionStrat will be pretty good because it's going to calculate all of that for you and give you a chance of profit. Okay, good one, really good one. Let's go here. What would you add, Bronco? Add to what exactly? Hey, Mav, would you hold a VIX futures short over the weekend? I'm in close to 37 VXM. Would you short the VIX over the weekend? I think that the evidence right now is suggesting that you should. That the evidence right now is in your favor. In the 2 hours, it looks to me like a bear flag, and it looks to me that we don't have a cross right now. It's not in the bag, okay? Things could change, and we cross above, and that's going to be a problem. But right now, absent of seeing that cross in the MACD in the 2 hours, I think shorting the VIX is okay. Hey, Mav, I got Apple 185, 170 for May 16th. Is it a good trade to keep? I think if you have, let's say, rebound plays that you've been accumulating, I think you should keep at least one trade for the downside. And Apple, with its exposure to China, could be problematic. So I'm going to keep my Apple puts for now for May 16. I got them the same expiration date. I'll keep them because I think that Apple is the weak link. And if there's any reversal or downside coming, it's going to be led by Apple. Because the tariffs are way, way too high. Senior, thank you so much. Neil, I have now put spread at 18,500 and 17,000 for June. I'm assuming you're talking about the NASDAQ futures. Should I play a rebound by buying the NASDAQ futures 20,000 for April 30? See, that's a really good question here, good position. So let's look at it. In Qs, you have a short, 18,000, 18,500, even better. 18,500, right around here. You got that short. And then you're hedging by opening the spread at the 17th. I think that's a really reasonable range. But what if we have a retest at 20,000 and then in time we come back down again? I think it'll be worth it to hedge using the calls for 20,000. Maybe not today because there's not a lot of risk right now. All what we've done today is just maintain 18,000 of support. But we haven't beaten any of these top candles that we've seen here, the breakout or the pullback candle. We haven't beaten any of them. So you can afford to wait to buy that 20,000. But if you think that you need that hedge just in case, I don't know, Monday over the weekend we have a deal or China called and things pop, you want exposure and protection to that, then I think, yes, before the end of the session, I would buy the 20,000 with the expiration date of even next week, if you'd like. You don't have to go to the 30. You can buy next week because you need a hedge for what's going to happen Monday. Michael, hey, Mav, thoughts on NVIDIA? I have 95 puts for the 25. Down 10% currently. If this was your trade, would you cut, roll, or to a further trade or hold until next week? So we have the 95 for the 25th on NVIDIA. The 95 is not way too far, but as I said, the risk right here, unless we lose 106.5 today, I would say that the risk is still to closing the gap. And in that case, it wouldn't make sense. So I would say wait till the end of the session. If we are not above, or excuse me, if we're not below 106.5, then I would say you're better off taking it off the table because your loss is 10%. It's not a big deal, right? So you can take it off and then place it again once we lose 106.5, if that happens next week. That way you avoid any surprise that happens in the weekend, for example, if China called and then Monday we see NVIDIA popping higher, opening at 119. Now all of a sudden your trade at 95 got damaged significantly. So this is what I'll be looking for. If you continue to trade above 106.5 by the end of the session, I would say take it off, place it later on. If we lose 106.5, I would say you probably want to double down at that point. Okay, Meta. Calendar puts at the 5:30. We're talking about May 9th. That's what you're going to sell, and you buy the 16th. Okay, 5:30 at Meta. not way too far. So 530, if you can get it for the price that you're showing me right here for 185, that's a pretty good price to have. But think about it this way. This should not be your main trade though. Your main exposure should be for a rebound next week. If you want to hedge against that, this one would make a lot of sense because you're selling a calendar or you're buying a calendar put. You're selling 9th, you're buying the 16th at the 530, not way too far out of the money. That, even being honest with you, what you want to see is meta trading a little higher into next week. That's going to benefit you because the 530 is going to go, the one that you sold would go out of the window. And then at some point, we begin to head back down. You have an earnings report coming out here. So I think it's a really good price for the structure and especially for a hedge against any longs or upside bets that you got. I would say I'd go with it. SOXL versus the SMH. Which trade is better to get for next week via options for a bullish play? Suppose you want to bet on chips rebounding. Again, that would be the catalyst. Would be China. If China calls, that's gonna do it, of course. SMH versus SOXL. My 2 cents. I would say usually when we trade options, I try to avoid trading them in inverse or levered indicators because the pricing is not pretty good. So I'm going to stick to the SMH, but it will be cheaper to enter the SOXL because the price is cheap right here. Yet you're going to be overpaying for the premium, so you need a big pop to make your money back. So I would say use option strat once again. SOXL. Let's go to the 17th next week, and let's go with the 10, right? 10 calls, it requires about a 12% move. So on the SMH, I mean, the SOXL doesn't track the SMH, but roughly, it'll be about 4%. 4% upside in the SMH. So here we're paying about $100 for a stack that's trading at 10. So you're paying 10 times. Now, if you look at the SMH, and you go with a 4% move, let's call it 200. You're paying 660 for a stock trading at 200. You have a chance of profit of 34. On the other hand, if you go with the SOXL, you have a chance of profit also of 34. So since it is equivalent, the choice is up to you here. Do you want a smaller entry price at 100 or do you want the bigger trade at 600? I would say if you do the SMH, you're probably going to need to open a spread. So you buy the 200, for example, and then you sell the 205. And that way you reduce the entry cost and you still got 100% profit that you can collect here in the max profit. And you have now increased your chance of profit to 43%. You can do the same thing in the SOXL, but I don't know if you're going to get a premium or not. So let's say we sell the 12.5. You get a little bit of premium, knock it out a little bit, but not as much as the SMH. So that's not going to increase the chance of profit by much. Even if we sell the 12, it's not going to change the chance of profit to exceed the SMH. So here's what I would say. If you're going to go with the SMH, go with the 200, 205 call spread. If you're going to go with the SOXL, go with the 10 calls naked. Okay. Really good questions today. Craig, how about the COP 86 calls for the 25th of this month? So we're looking at Conoco here. Energy could be, by the way, an interesting play for next week. If you're betting on rebounds, for the viewer who asked about China, I'd rather that you don't buy the dip in China, BABA, Pinduoduo, FXI, etc. If you want to bet bullish that something good is going to happen out of the trade war, I'd rather you go with copper or oil, because those are the ones that are going to rebound for sure. And they could have other catalysts where they can ignore China for a little bit. They could tune it out for a little bit. But the Chinese equities cannot do that. So Conoco right now is showing sort of a distribution pattern after a big flush, which if it's resolved like this, we're probably going to head higher again. So if you want to begin to add a position Conoco, I suggest that you do it today. You're probably not going to hold you're not investing because of dividend here. If you're opening a new position, because who knows if you're going to hold it for the entirety of the year or not. But for now, I would say, folks, if you're going to bet on any good resolution, I would say Go with the USO. Conoco would be okay. All of the oils will do pretty good because they're really, really oversold. I mean, even the XLE is showing a positive pattern here. So by the end of the day, I might begin to nibble here and buy some energy exposure for next week. KMI, of course, always catches my attention. That I think we're probably going to close the gap, so that's going to be one that I'm going to bet on. And Exxon, I want to add to my position, so I'm probably going to buy the 105 calls. If we close above by next week, I'm probably going to exercise and add to my shares in Exxon. But for now, for me, my exposure in energy is limited to Exxon and USO. And USO, by the way, it's just I bought a bunch of shares that I'm going to hold for a period of time, then dump them. So you don't want to buy a lot of stuff in energy. You don't want a lot of exposure because we have recession fears, and maybe we can cool that for a day or two, a week or two, but that's not going to make recession fears leave. So energy becomes a really bad place to invest in the long run, but it's going to make a good place to trade in, especially if we have a rebound coming. SPY is still holding pretty good above 530, so we'll see if it makes it at 535. I think it can. Good to short gold futures, gold ETF or GDX. See, this is one of the trades that I'm thinking about before the end of the day, which is GDX puts. I think that there's a lot of money that was made in the GDX recently. We've seen a lot of unusual activities in Newmount and Barrick Gold, and we've seen unusual activities in GLD. I think they're going to begin to book their profits and push it down. So before the end of the day, I think I'm going to make a decision here and buy some puts for the GDX for next week. And believe it or not, that's going to be a bullish bet for the market, because if the GDX goes down, that money is going to be freed up to chase the dip in equities. Keep that in mind. Ask again, why is the 10-year rallying despite a weak USD? Well, you watched the video last night? Because I made a whole video about it. We have the dollar and bonds, US bonds, hitting down. That could be a reflection of lack of confidence. That could be a reflection of China dumping the dollar and dumping US bonds. And this is why we see the dollar going down and bond yields going higher. But I think that today we're kind of doing a little bit of reversal. Maybe got a little excessive, and now the TLT is kind of reversing. So is the dollar. So if I had to choose right now, I would go with dollar is going to rebound, bond yields will cool off. We'll have a little bit of relief in the market. That systemic risk is going to be relieved a little bit. I don't think it's going to be eliminated though. That's going to come back later. Go back to the SPY, holding pretty good. Mav, is the Qualcomm trade closed? It pushed higher. Well, if we're anticipating a rebound next week, the only reason to keep Qualcomm right now at 120 would be if there is bad news and we see trade war resuming. So if you want to keep it as a hedge against something that you're long, or if you open some rebound plays, you want to keep Qualcomm as a hedge against it, okay, you can keep it. But I would say if we don't see any signs of reversal today and the VIX closes with a confirmation that it's heading down, and we see HYG trading up, and we see all of the indicators that I'm looking at and I gave you in the morning brief pointing out for the rebound to continue, then you got to remember that you have with Qualcomm, unlike the other trades that I recommend having, which is May's expiration, June's expiration, this one is going to expire next week. So it doesn't even make a really good bet to the downside at this point. If we see signs that the rebound is going to continue by the end of the day, probably want to cut it. I don't know how much it has right now, but it's probably not much. But it's if you want to cut it, you cut it at that point. If you want to keep it against bullish exposure that you got, at least I recommend having one or two for next week. So I have Qualcomm. I'm going to keep that just in case. I'm probably going to add one other hedge, meaning a put with the expiration date of the 17th, just to hedge against the calls that I bought and I'm buying in today's session. SPY still above 530. Holding YINN 2118 put spread for May. Rather than closing with a loss, thinking about buying back, the 18 puts up about 60%. You're just holding the naked 21 puts. So this is interesting because you got China ETF. You sold, let's see here, you bought the 21 and you sold the 18 put. Well, both of them are out of the money now, if that is what we're talking about. 21 and 18 put spread. Okay, I get what you're saying here. So you have 21. You're way far out of the money, though, right now. It's not impossible, but it's kind of hard. You need to see a reversal again in China. Like I said, right now, the market is looking at it as, okay, we have a ceiling in the trade war, and they're looking at that as good news. Now, do you buy the 18 puts and you commit more capital in the trade that is going against you right now? That's not a wise decision at all. And you just keep the 21 puts. No, because you're going to find yourself that you've invested in buying back the 18. And what if the YINN continues to move higher into next week? What is the point, right? So you don't want to do that. You want to make a decision about it. Make an assessment and be realistic. You see the RSI in positive divergence. You see the volume coming back down. You see some good news in the trade front, at least from a perspective point of view, not a fundamental change, positive change in the trade policy, but from a perspective that we have a ceiling. If I'm putting 2 and 2 together, it goes back to the question of the FXI with the other viewer. If it was my trade, I'd just close it all together and exit. Thanks for the answer. Looking to buy AEM and Barrick if there is a pullback, buy the Canadian market as currency hedge. Yeah, a lot of folks will use the opportunity, by the way. This is why I think that the rebound in the dollar is not going to last for too long. Because a lot of folks, I mean, if you got to understand with the devaluation of the dollar right now, you, as an American investor, you're better off actually having exposure to the foreign currencies or even buying equities, if you'd like, using foreign currencies. Because that's going to give you a bigger purchasing power. So I think it's just a matter of time. The dollar is going to rebound from oversold conditions, but sooner than later, you're going to see folks going to the franc, for example, buying it again, so the dip will be bought here. No doubt in my mind that the Japanese yen, the dip will be bought to Canadian dollar, same thing. I don't know if you have a preference to the Canadian dollar for some reason, but I would say I would stick to the yen and CHF, because these are the best really as hedges when you have volatility in the market, when you have recession fear in the market. Now, if you want to buy AEM or Barrick Gold, let's see here. I've seen a lot of unusual activities in Barrick Gold. Now, AEM looking pretty good, but it's going to pull back, remember? So if it pulls back and the market rallies, you know that money's coming out of the gold miners and gold and now chasing equities. But in time, you know that the dollar is going to go down again. That's going to be good for gold, so the dips should be bought. Here you got a dividend of 1.5. I have a bias to this guy right here because I own it. It doesn't pay a similar dividend, but it's just a diversified miner. I'd like to hold this guy better, but now you don't need a redundancy and hold both. So if you want to hold Barrick Gold, let's see here. Barrick Gold, yep, still underperforming, to be honest with you, but it has a big dividend here of 2%. Between the three, I would go with AEM for you, though, because you get the higher dividend here. A little higher than WPM, lower than Barrick Gold, but at least this one been tracking gold accurately. Barrick Gold has been lagging. Okay, is it a good idea to get rid of Coca-Cola and UNH shares since they're close to all-time highs in order to give breathing room for margin? Well, when you have something trading at all-time highs in an environment like this, you probably want to keep it. You don't want to dump it. You want to sell covered calls on it. So you have Coca-Cola here closer to the highs. UNH been doing pretty good. So I would say you sell covered calls, but you don't want to dump your shares because you're probably going to need them again. Just sell covered calls, especially in UNH. I mean, UNH can raise a lot of money. If you sell here a call at the 600, for example, for next week, you're at about $1,600. So if you think it's stopping right now, and maybe it is because it's outside of the bands, it comes back down. We see a rotation from risk off to risk on again. You're going to net at least the credit here of 1,600. Now you have to own 100 shares though. So what if you don't? If you don't, at that point, you probably want to buy puts on them. But I would say exiting these shares that have been outperforming, it's a little too extreme, to be honest with you, because you're going to need them at some point again. Why is the market maker does not kill the 530 calls and close slightly below? Maybe that's what they're going to do at the end of the day, right? Maybe that's what they're going to do. They're just watching the feedback right now. They can do that if they choose to, because 530 is the max pain. So if you trade in or around 530, you just kill the majority of the calls with the highest open interest right now. And you already got the puts. I mean, the puts already got destroyed today at 530. They closed already. So it's just a matter of maybe frustrating the calls a little bit. But if we continue to see calls being bought here and puts being closed, which we're seeing actually them buying a little bit. We're seeing buying of the 530, 132. So the puts are offering a little bit of resistance right now. And maybe this is why you see the SPY kind of pulling back a little bit, retesting that 530 again. So the market maker would love to close the 530, slightly below, slightly above. That's going to do the job. But they're also waiting for the feedback from traders. As more feedback begins to flow, they're going to know exactly which risk they have to cover. And they'll make a move one way or the other. Either stick to 530 if the flows are neutral and they slow down. If they increase in the side of the calls, they're probably going to frustrate the puts a little bit here and then move it all the way to 535. What is your criteria in the Fed to look at either the VIX 5 minutes MACD instead of the usual 2 hours or 4 hours? The reason I ask is the VIX is curling up on the 5 minutes, but it is trending down in the 2 and the 4. Same thing, it's the same discussion that we talked about yesterday in the time frames. So in the VIX, it doesn't matter as much. In the indices, it does. And the reason is the VIX, you could see movements up and down, to where the 5 minutes is just too short to give you anything. At that point, you want to stick to something like the 30, which not looking pretty good here. The 15, not giving us anything. So this is why I'm going to stick here. In the VIX, I'm going to stick to the 2 hours because that's a cleaner MACD and it's been reliable. So I'm going to stick with it. And then look at the 5 minutes in the SPY instead, not the VIX. So here you're seeing the 5 minutes in the SPY. It is changing to bearish momentum. If it plays the bearish momentum via consolidation like this, then the next move would probably be higher, much higher. So this is how I would look at it now. 5 minutes suggests a little bit of a pullback in momentum in the SPY, but what about the hourly? The hourly suggests that we're still strong and we got plenty of room in the hour side to go ahead and close the gap. So right now, if I had to look at it, the longer the time frame, the more important it is. And of course, you look at the 5 minutes as either a rebuttal against the 1 hour, the longer time frame, or a evidence of support. Evidence of support is bearish momentum plays out, but doesn't result in a significant pullback or loss in support. And that's going to let me know that I should go with my instinct in the hourly chart and maybe buy a trade to close the gap right here, because that's a possibility now. If, on the other hand, the 5 minutes begin to turn negative and we see the chart here getting damaged, then the 5 minutes is going to be an early warning that watch out. What you're going to see here is the hourly will begin to flip and lose momentum too. So you use the 5 minutes as your leading indicator to the next move you're going to do in the hourly time frame in the SPY. But it doesn't work pretty good in the VIX, to be honest with you. Mav, how do you check the cost of borrowing shares for short on IB, Interactive Brokers? So when before you initiate the short, before you do a confirmation of the short, you'll see the fee listed, right? So this is why I tried to do DFS yesterday in Interactive Brokers, and it was insane. So it didn't make sense. So I think that if you want to initiate a short, if this rebound, let's say the rebound continues into next week, Monday, Tuesday, and the VIX comes back down. So if we look at the VIX here, let's say it comes back down to 30 or below 30 at some point. That's when the cost of borrowing is going to be cheaper. And at that point, I think that we have to, if you had your eyes on a short in any chart before, that's going to be the time to begin to open that short, be it DFS or many other charts that I'm eyeing. But I think you should wait a little bit till that, see if that rebound is going to play out and give you better pricing. Because right now, a lot of them are out of whack, to be honest with you. Does following the HYG unusual activity trade make sense? Absolutely, Paul. Absolutely, and they nailed it. They absolutely nailed it. The traders nailed it. I mean, you look at the videos that we produced 2 weeks ago, 3 weeks ago. They were all betting against the HYG, buying puts in a big way, and it did crash. Now, if we begin to see folks buying or closing puts, so this is really important. Again, the beauty of option strat, folks. If you go to HYG, and you begin to see them closing, right? They're closing. A bull put spread closing, so selling here, that's going to be bullish, right? So if you begin to see them closing the puts or closing the put spreads and maybe buying calls, that's going to be your indicator that, hey, wait a minute, we have a rebound here, and the traders are feeling confident about it. But so far, they're still buying puts on the HYG, but they're going longer. See the expiration dates, June, August 15th, May 16th. You have the 75 here, but the 75 is really close to the money, which I don't think it's a good trade, to be honest with you, at this point, because we have retested 75 today. Just zoom into the hourly. Retested 75, and it's holding so far. Again, if you begin to see buying of calls in the HYG, that's going to be a really, really strong signal that, yes, the rebound is not confirmed, because they're not going to do it. The traders are not going to do it and buy calls in the HYG unless they're super confident that there is a rebound in the market. VXX is what I like to look at. One more thing, is there any way to revisit the previous Top Gun streams? This is a great teaching, and I would like to spend some time listening to the Q&A. And the Fed will give you the highlights, okay? I'll give you the highlights for today's session and yesterday's session. I'm going to look at the previous 2 streams we've done in the week, too. If there is something important, I'll stitch it together in one weekly live stream highlight. So I'll make it easier for you, because if you watch the live stream, again, you can click on the link in the post on Patreon and watch it again, but it's going to take an hour or 2 hours, and all of the pauses and all of that. So I'm going to cut it, give you the most important parts and stitch it for you, and you're going to have the highlight for the entire week worth of streaming. To clarify, I'm non-US, so I can buy the miners in the US or the Canadian exchange, so I can choose the currency to use as a hedge. Dollar down, gold up, Canadian up. Well, good for you. Okay, so in this case, I mean, you want to go with the Canadian dollar. Your money's going to go further out in buying the shares. And I think that, again, a lot of folks, let's say across the pond in Europe, if there is legitimate signs of stability in the U.S. market, it will make sense for them to buy using the euro, because their money is going to go further out now that the dollar is down. Let's go back to the SPY. See, the bearish momentum is playing out in the 5, but it's not causing a lot of damage. So far, this is bullish for the SPY. Let's look at Discord here. I'm a gardener. You say I'm doing fine. Had puts layered, took them off, replaced with longer dated, lower cost ones, and playing the upside in the TLT with calls. I am with you here, although I'm participating in a different way, which is the credit spread, because the TLT is not stable yet. So this is why I'm using the put credit spreads instead. I mean, China's dumping, folks. I mean, all of this, what you see right here, I mean, I think China's retaliating behind the scenes, because who has the money to push the 10-year like this? So it's going to be frustrating, but I'm with you. I think that the TLT should be rebounding from this point on. Lenny, since I joined Patreon, is it somehow possible to also view the nightly videos on YouTube? Yeah, you're not going to be able to do that. So I would say some folks have their Top Gun, for example, in Patreon because they want to support the channel and not overpay for YouTube, and then they go ahead and buy the lower tier in YouTube to have access to the videos in YouTube because it's maybe better visual or has the captions or whatever. There is a way we can do it that if somebody's in the Top Gun in Patreon where I can share a link, but that's going to be only for like 50 people if they want it. So it's something I'm going to think about. But I know a few of my members who have Patreon and YouTube and they're watching that way. And I thank you for that support because you don't need to do it. But let me know what you think about it. Option Strat have been showing rough rise futures stacking for the past 3 hours. It went from 30 million to 80 million. Well, you got to understand that we have, when it comes to the tariffs, to be honest with you, it makes sense. At least I used to date somebody who, her father owned a rice farm in the border between California and Oregon, huge rice farm. And if you brought up the subject of tariffs and trade and all of that, they're always frustrated because they produce a lot of rice, but we don't eat it here. So they have to export it to China, to Japan, other countries that eat rice. Problem is they tariff U.S. rice insane amounts. So in the case of rice, and you saw the president bringing that up a few more times this week, the example of rice. So maybe it's related to this, that we see rice futures being bid up. Who knows? I think there is, of course, a tariff component to it. That would be my 2 cents. That maybe they're anticipating an announcement of some sort, a deal of some sort, that makes it easier for rice farmers here to sell their rice to Japan, for example. If that is the case, that increases demand and pushes the price higher. Terry, are you shorting DFS as a hedge of COF acquisition does not go forward? I'm not sure if Capital One will have the capital to buy Discover. I think Discover will be bought by somebody else, not Capital One. And honestly, even if they're going to block Capital, I don't know, maybe the Republicans are not, but the Democrats definitely going to stand against it because now you're talking about consolidating financial institutions that cater to the middle class, lower end consumer. That might be a problem. So, and I say that the fundamentals for this company is just horrific. So I'm just looking for a chance when things cool off and the cost of borrowing goes down to begin shorting this guy right here. I'm not worried about Capital One buying. I think Capital One has their own problems. From the auto loans alone, they got their own problems. They cannot afford to buy DFS. SPY, here it is. That's your 5 minutes. Bearish momentum now maybe done, right? Maybe it's done. It's just going to follow the hourly momentum now and go ahead and close the gap. Do you prefer to enter a long-term position with a call or cash secured put? That's a really good question, but it depends. If something is moving higher, for example, I cannot guarantee that it's going to dip down so I can sell a put, right? I'm going to get my price. You can do a combination of both, by the way. You can buy a call and then sell a put because you like the equity so much that if it dips below a certain price, you're a buyer, so you sell that put. But you cannot guarantee that it's going to stop right now, so you buy the call at the same time, but you finance it by selling a put. That's a really common strategy. So think about combining both. We go back to Discord. Should I buy Smuckers? I'd rather you buy risk on, to be honest with you. Because if we have a rebound, I think it's going to favor, that's Mexico. Let's do NYC. I own Smucker. Still have it in the portfolio. I think it's going to be a good performer throughout the volatility and the recession and all of that. Maybe it is, again, showing Inverse on his shoulder, higher we go, right? But in the immediate run right now, let's say next week, which kind of assets will benefit the most in the scenario of a rebound? I would say it's going to be the big caps. It's going to be the risk on stuff. And you see some of that already playing out right here. So I'd rather go with some of the big caps or even a rebound in chips rather than buying SJM right now. Think about the question by the viewer about selling a put and buying a call. Maybe you should be doing that for June, for example, or May. And if it goes above the price that you got, the calls, you can buy it at that point. If it goes below and then it doesn't look bad, you can exercise the puts and own it at that point, but you don't need to commit the capital right now. You can use option strategies to enter your SJM. Such deflation to go from crazy trading days into this weird consolidation. Well, things are cooling off a little bit today, so the market maker wants it to cool off. I think everybody needs a breather after the action that we got today. And I think that the news that we got overnight, because you got to think about every problem, every conflict, even let's say in relationships, in your workplace, it gets to a point where it boils over. That's the maximum degree of escalation that we reach in a problem. Usually a conflict resolution follows after that because the problem gets way, way bigger, out of hand, and now it is in the interest of both parties to begin to negotiate and to begin to resolve that conflict. And I think that the market's reading today is we reached that point when China said, okay, we'll do 125, but we're done. As if saying, hey, Mr. President, we're willing to negotiate if you want to be nice, if you want to treat us as equal. But we're not going to respond. We're not going to escalate more, so you don't have to retaliate any more than this. Let's call it a ceiling here. You retaliated, we retaliated. Back and forth, back and forth. Now we have a similar tariff regime of about 125 on each. And let's begin to negotiate from this point on. I think this is what the market is now looking at. This is what the market is anticipating, the glass half full. And this is why I still support the concept of a rebound next week, even if it is based on the optimism of a deal. Whether it happens or not, that's a different story. Let's see here. Adnan. Hey, Mav, I think we know we're all desperate to meet you. We are indebted to your service. Let's get a conference. It's a must, especially times like this. It's in the plan. But, you got to trust the big guy upstairs. When it's time, it's going to be time. I don't rush these things. I just trust when I get that instinct that it's time to do it, I'm going to do it. I mean, this channel, The Maverick of Wall Street, if you look at the YouTube, it was created 2018, but I never did anything with it until 2020. So when the time is right, you're always going to take the next step. Hey, Matt, thank you. Just took the 529 to 534 for a nice profit. Good for you. Good for you. Look at this. Now we're moving up. George, okay, Brian, again, Maverick, thank you. If China and other countries are selling our bonds, what happens to the interest on those bonds? Well, the interest is going higher, right? So you as an investor right now, somebody who's, if you want to diversify a little bit of your retirement portfolio, you're not going to see it so much in the 1 year, but I'm happy with a little bit of a pop here, recovery of the 1 year, because I can buy the 1 year and secure a 4% right now. Of course, you have to look at the money market funds, because if it is an equivalent yield of 4% or even more in some money market funds, you have the flexibility in a money market fund. But the idea is some investors want to buy fixed income, and I would say that this rebound that we got is a good opportunity to begin to add to these positions. If you want to buy the 1 year, if you want to go with the 2 year, let's see how much is that paying. At 3.9, that's okay. I would not go to anything in the longer end because if I'm going to hold for 10 years for 4.5, I mean, might as well just go with the money market fund. So I would say it's an opportunity here, folks, to add to your fixed income exposure because the yields are high right now, but when China's finished dumping, and we have recession fears showing up again, you're probably going to see yields heading back down. And there is an argument here that we could be forming a topping in a shoulder. Let's just see it right here. Cup and handle already, we're done with that today. We got the pop, and now it's finished. But it could be a head and shoulder. We begin to head down at that point. Again, my 2 cents, I think that the move that China did overnight, kind of an extension of an olive branch between the lines, and I think that the White House will accept that. And we will see negotiation based on what happened, and maybe a little bit of positive talk that could lead the market to recover a little bit. And this is why I say if you got FXI puts, if you got YINN puts, maybe you want to take those off the table, because I wouldn't be as bullish as let's bet on China right now. Let's buy Alibaba. I would say maybe we buy copper. Maybe we buy something like oil that could rebound from any good China news. We are already here, folks, at 535 in the SPY. So we have reached the target that we talked about, 535. Let's give it a refresh here. Yep, already 535. Mission accomplished. No resistance here from the puts. So what is the next step? Can we move it to 540? Possible. That's a possibility today. We can move it to 540. Not out of the ordinary. So I would say the next stop right now, because I don't think the puts are going to begin to buy here and resist. If anything, they're probably going to see chasing of zero DTEs. It might lead us to 540. It's too expensive, though. For 90 cents, it's a little too expensive. For a 1% move on top of what we got, it's a little too expensive. Be honest with you, if I'm bidding here, I'd rather do this. Watch this. We go with the calls, SPY, and I buy the 540 for Monday. Whoa. That's too expensive. Sell the call for today. Here's an interesting exercise, folks. So a 2% move exactly. Let's give it here. 2% move. 2% move in the SPY for Monday will cost you $500. Okay, so let's do this. 2% to the downside will cost you about $6. So the market maker is still pricing the puts over the calls. They think that the bias is to the downside still. But nonetheless, these are expensive premiums. Wow. So I guess we're not going to do anything right now. Okay, thoughts on leaps. 100 calls, TLT. You could do the TLT, but again, look at the volatility that we have in the bond market. Can you really guarantee that we're going to see folks buying U.S. bonds at this point? We need to answer that question. That did folks lose confidence in the U.S. and therefore they're not buying the bonds? If you disagree, then yeah, TLT will make sense, because at some point you got to buy U.S. bonds. So I think that the answer should be: is it really worth it to spend the money on in a leap on the TLT, or can you use that money for something easier? It could be maybe more immediate or sooner than 26. Okay, BTC at 84. BTC moving higher is a sign of restoration of a little bit of confidence, a little bit of signs that the retail investors are beginning to join, beginning to feel that, okay, it's a little safer now to begin to join. So if you look at the active options, volumes moving a little higher, but again, it's options expiration. But you see the calls, right? You see 69, 40s, 60s. So that's a sign that, okay, now they're beginning to show up. And that's a good sign for the market to begin a rebound into next week. I still have puts on the SPY for May, but I hedged with 105 calls. On the SPXL, got it, okay, SPXL. This is the bullish ETF. Yesterday, near the bottom. Should I hold the calls for now? Yeah, absolutely. Absolutely. You need that hedge. You need that participation to the upside. And you should not let the put side go way, way out of the money. You have to specify a threshold where that trade has to be either rolled up or out. But right now you have the SPXL. Let's look at that one here. SPXL, and you have 105. So you're decently in the money now. Yeah, I would say keep them. You might go all the way to 135, 130, not even 140. In a big rebound, and then stall and come back down again. But definitely keep it. The trick, though, if you begin to see that we have sizable gains to come, it is in your interest to close the puts and rely on the calls alone, because your calls might go higher and produce a lot of profits, 100, 200, 300%. But then you got a loss in your put position, and all in all, you're either losing or making just a tiny profit, if not being neutral altogether, being flat. So the trick here in a bear market dynamic is at some point, when you see the rebound sustaining and beginning, the rebound process beginning, and there is sustainability element to it, you begin to either close your puts or roll them to longer expiration dates and roll them up in price for longer expiration dates as the price goes higher. Again, I'm going to make that video, bear market strategies, and I think after that it's going to clarify to everybody how to deal with all of this. SPY is still looking pretty good, maybe forming a little bit of bull flaggish showing up right here, so we'll see what happens. For copper futures, which month and strike? So let's look at copper here. Copper futures, I would probably not go outside of the money. I'd go with 4.5. So when I buy options and futures, I usually stick to in the money or add the money. So it's going to be 4.5. That's what I would do. Since we're anticipating a rebound next week, so it shouldn't be a longer expiration date. You shouldn't go beyond April. You should stick to a shorter expiration date, because either it's going to happen within a time frame of about 2 weeks, or it doesn't. If we get bad news with China, then copper goes down again. But I anticipate some good news to show up, and copper to continue to rebound, maybe retouch the top of the candle right here at about 4.82. So if you're going to trade options, that's how I'm going to do it. Ryan, your thoughts on SQ's 29.5 puts with the expiration date of the 25th. So 29.5, it's a bullish bet that the Qs will go higher, and 29.5 is going to require, let's see here. That's going to require move about 18-20%. Again, is it impossible? No, it's not impossible. If the Qs rallies by 5 points, 5 percentage points, the trade is going to be profitable. What I would say next week is the threshold for you, specifically Wednesday. If you don't see profits in the trade, if you don't see the SQs trading, let's say closer to 30, 31, 30, you probably want to exit at that point. And you might be exiting at a profit, by the way, even if we dip down to 32.5. But the thing is, if you hold it more than Wednesday of next week and you're not in the money or close enough to the money, what's going to happen is the decay will kick in and will eat away value. So it's okay to keep right now, but Wednesday we're going to make a decision about it. George, thoughts on PLTR? Red today usually pops big on green days, have longer dated puts still. Well, relative weakness in Palantir because some of the software names are down too. I think it's mostly due to options today, so Palantir, for all you know, might begin to join a move to the upside. I would say the threshold is 90-30. If we close above again, understand that Palantir is probably going to head higher. And at that point, it is in your interest to close your puts, especially if you have them at 60, 70. It's in your interest to close them, wait and see how this rebound is going to play out, maybe join it, right? Participate in that rebound by buying the 90, selling the 100, for example. And then see where it's going to stop. And once it breaks 90.30 again, you want to re-enter the short. Unfortunately, folks, in a bear market like this, you have to be dynamic. Like, I know it's too much to make decisions all the time, exit here, do this, do that, and it costs also commission. But that's the nature of being dynamic in a bear market, because the rebounds are big. The rebounds in a bear market are huge. saw the declines. When the declines happen, they're consistent, they last, and they produce huge gains too. But we have to be very dynamic in such market. Paul, Mav, I find it strange that the market had a massive move up and then dropped overnight and still managed to close the gap. Is it possible that once we close it, we will drop? The reason why you see a lot of difference in the futures market and then the trading here once we open trading in the U.S. is we have difference of opinion, right? We have maybe foreign investors not feeling pretty good about the U.S. market, U.S. economy, and U.S. bonds and the dollar. But when they see that when they're dumping the dollar, what does that say? Lack of confidence. So that leads the futures to go down. But then you see the investors here saying, yeah, well, I'm looking at the glass half full, and maybe China's going to begin to come to the table now that they said there was a ceiling in the tariff, retaliatory tariffs. So you see that difference of opinion being reflected in the difference of performance between the futures and the regular session. Another question, does selling the 40 or the 50-45 on the TQs, 50-45 puts in the TQs as a rebound play or a hedge makes sense? Yeah, it does. I love put credit spreads. We have good signs that a rebound is happening. I favor them. You got to go with it. Just make sure that you're netting a decent credit out of it, though. So let's go with next week here in the TQs. 50-45. So we sell the 50, buy the 45, netting a credit of about 185, but the risk here is 300. So the risk versus reward is not that good. Maybe you want to go. See, the TLT trade was pretty good because the credit was high at that point. So you need to get as equal as you can get. I'm not saying it's a bad trade, by the way, because the chance of profit is 53%, so it's pretty good. But the best credit spreads are the ones when your net credit is equivalent to your max loss. That means that at least you have half of the loss already captured, if it happens, and you're only obligated for half. But when you have a bigger difference than that, then your max loss could really hurt, and it's going to require a higher margin requirement. So I want you to think about that and play with maybe other ETFs and see, or maybe the individual names and see if you can do a credit spread at a more favorable position than this one right here. Okay, let's do unusual flows in YPF puts. It could be onto something. If you like the trade, follow it, because a lot of these unusual trades, by the way, have been working out pretty good. Lenny, how do options reflect on share prices? Is it due to people exercising them, especially on Fridays? That's one aspect, of course, but the other aspect is folks bid and ask, right? If there's a buyer and there's a seller. So not just on the equity price, that's one way to do it, to buy at the current price. And it reflects in the broker on the exchange as we have more buying demand than selling and the price goes higher. And one way to determine where the price is going to go is options. So when you look at options like this, you know exactly if somebody doesn't want to speculate in the current price right now, within the really tight range, if you're just trading the shares alone, what happens is they buy calls. They think that, hey, by today, I think the shares might be at 535 or 540. And that sends feedback to the market maker that folks are buying certain calls, and then the market maker looks at the tape, looks at their own information. Do we see more bids at the share price? If the answer is yes, okay, that's going to increase the upside risk. And then let me look at what are they buying. They're buying the 540. And then the market maker, in return, after all of that studying, they begin to buy the equity. Why? Because they fear the obligation of 540. In this hypothetical example, of course. So they begin to buy the SPY at cheaper prices. That way, when they get to 540, if it expires in the money, their obligation would be selling something that they bought at 435 at 540, which is pretty much a win for the market maker. Not to mention, of course, the premium that they charged for selling the trade. Mav, how do we know at what level to close our hedges and open new ones? So that's going to be in the bear market video. I would say right now, as the SPY is trading right now, we have not hit a threshold in which I would say close your puts that you have for May or for June that are not really far out of the money. They're not like 10% out of the money. I would say it's still worth keeping them because you haven't closed the gap. We haven't done anything here to do any sign of reversal. All what we've done so far is we traded within the body of that gigantic candle right here. We're leaning upward, but it's not in the bag yet. So it's worth keeping those hedges and the puts for now. But I'm going to give you more examples in that video so you'll know in your specific example what you have to look for to take the hedges off and just concentrate on one side of the bet. I see right now, folks, there's a bull flag here in the SPY. It might be heading higher again. So if we maintain 535, as we did 530, and we went to 535, the next stop here would be 540. If there's, again, look at the 5 minutes. The bearish momentum is probably going to kick in. It's going to see bearish momentum. If that bearish momentum results in just consolidation like here, then we're probably heading toward 540 once the bullish momentum plays out. See how this is used right here, the 5 minutes MACD. No damage done in the bear, in the negative wave. Now we switch to positive, you go to the next number, which was 535. So if we do the same drill here, next number would be 540 in the SPY. Okay, Impact Wonder, you closed your 500 SPY puts before the spike up. Should I buy them back before the close at a higher strike or wait till next week? I think you can afford to wait till next week. If you want to add it just in case there's something that could happen, I would say add them with shorter expiration date. Okay, you don't need to add them for May or June at this point. Add them for a shorter expiration date, meaning for next week. If you feel that, hey, something might happen over the weekend, I don't want to assume all of the risk here in case we have a move to the downside. Ben, I think we're going to have an explosive event going into OpX next week. What do you think about added the money call fly above the price and added the money put fly? Yeah, that's a big assumption though. That's a big assumption. And the butterfly, I mean, if you're going to do butterflies, puts, or calls, shorter expiration dates make sense, but you're probably going to have to, what you got to do is you got to close somewhere before the expiration date when one of the legs are profitable. So you're going to have the put leg, you're going to have a call leg, and then once the tape moves toward one side versus the other, close the other side. And you probably want to close the main bet that you now have before the expiration date. Because I think I agree with you that we might see a big move into the OpX next week because of all of these puts and calls that are accumulating based on volatility. And that's going to cause probably a big move comes Friday next week. And holding a butterfly spread, it's not going to be something you want to do if you're expecting a gigantic move. Even if you have a big wide range, I would still say that if the range is so wide, it's not going to be worth it as a trade, to be honest with you. But if the spread is wide within a reasonable range, you could blow through it in a big volatile move in options expiration. We got a lot of viewers today. Higher than usual. Gabak, do you think Pfizer is a good long? No. Pfizer has its own problems, and now that we have tariffs on the pharmaceuticals, it becomes even uglier for Pfizer. Maybe a rebound play, oversold rebound, right? And the Bollinger Bands, if you'd like, but definitely not something you want to hold in the long run. At least not right now. Now, Bristol might be worth it, right? Bristol Myers, if it rebounds, it might be worth it because it got punished here without a good reason, really. So maybe I'd go with Bristol Myers over Pfizer, but I would say with the tariffs against pharmaceuticals, and what we could be looking into here, which is a risk-on rotation, I'd rather you buy the rebound plays in the big caps and tech and maybe the banks now. The worst is behind us from earnings. I want you to do the risk on stuff more than the risk off, at least for now. Pfizer is about the same price like 10 years ago. I agree, but it is for a reason, right? Because Pfizer is not producing any decent growth. They stalled. They put all of their eggs in one basket, the COVID basket, and they cannot get out of it. I mean, 5 years later, investors are frustrated. Every other company, J&J, Merck, all of them moved on. Pfizer is the only company that's just stuck in COVID. Okay, folks, thank you so much for joining us today. This is pretty good, pretty decent session. And I would say again, if you see the 5 minutes consolidation in the bearish wave, just showing us consolidation, a little bit of a dip, you probably want to think that 540 is going to be hit today. Definitely the bias has become to the upside, and we'll look at the VIX last look here, the 2 hours. It looks to me again, it's heading into that bear flag and probably going to head lower. That's going to be supportive for the market to rebound. I think the premise behind all of this, from let's say psychological or fundamental reason, is folks are beginning to look at the glass half full by saying China placed the ceiling, and this is what we needed to know, that the tariffs are not going to go above what we have right now. And that's a reason to close some shorts and maybe play some dips. That's what it boils down to, really. But with that, folks, we'll be back again. Before the close in the Discord chat, so you can catch us there if you have any more questions. Mav, I took your stagflation portfolio. Mark, Amgen, Regeneron. Now, what is your suggestion? Better moment to exit even with a loss? No. You don't want to. These names, they're going to come back again. So you have, Mark is the one that I'm worried about. Regeneron is also biotech, so you have to be careful with that. But Amgen is pretty good. Let's say we have a rebound in all big pharma. At some point, you have to reassess, is it better to have Bristol Myers versus Merck? Is it better to have Gilead versus Regeneron? But I don't want you to abandon these positions right now because they're going to come back. They're reliable stocks, and they will come back as folks continue to accumulate a risk-off portfolio. Mav, I assume you like USO over Oxy or SLB for the 2 weeks calls. Yes. Or UCO, that's okay too. Which company do you recommend for dividends? What was reliable, right? If you look at the 3 months performance, so let's go 1 month to have a higher bar. Which companies performed in dividend? Some of the utilities, sure, but not a lot of them. Some of the staples, not a lot of them. Philip Morris did, but a lot of them did not. But these guys did in a reliable way. Now, do they pay a lot of dividend? Waste Management does 1.5%, about RSG does about 1%. So since Waste showed a good degree of resilience, I think that's a corner you can go with if you want a dividend right now. Some of the healthcare, but we need to see better signs. Bristol Myers is still one of my favorite, but I can't jump in right now. Verizon could be, if we see a risk-on rotation and we see risk-off like Verizon selling off, you could be thinking about Verizon. But I would not chase the dividend in energy. I would not chase the dividend in stuff that is really cyclical, like the banks. I would avoid that. And then tobacco might be a reliable source of dividend at this point. Happy Passover. Yeah, everybody, whoever celebrates, happy Passover. Would you recommend copper ETF? Yes. If you don't want to buy the commodity copper and you want to bet for a rebound right now, go with the copper ETF. FCX, of course, is the best name and it's the biggest weight usually, but if you want to go with the ETF, yeah, that's pretty good. UNH has a good dividend, but we got to remember, UNH, we talked about, maybe now is the time to sell some covered calls on it. BBR, Gabac, yeah, I'd avoid that. Okay, that's a Brazilian producer, could be subject to tariffs, could be, so I'd avoid that. If you want to bet on a rebound in crude oil, stick to crude oil futures or stick to the USO or UCO to play a rebound. Exxon might be okay to play a rebound. XLE might be okay, but for now, we're just looking for a rebound. Don't get too attached to crude oil right now. Any copper ETFs with dividends? Yeah, we talked about that before. I think if you look at copper ETFs here, the funds, COPX is one of them. That's going to give you a dividend of about 2.6, and then you have ICOP, which will give you a dividend of about 4 to 5%. So maybe you want to go with ICOP because that's a bigger dividend even than FCX. Let's look at the SPY one more time here. 5 minutes. Still working according to the plan. See, the bearish momentum is playing out right now, giving us a little bit of a pullback. What about Shell? Yeah, Shell could be. Shell, sure, could be. But I'd rather you go with Exxon, okay? Because if you go with BP, Shell, anything that's overseas, it could be still subject to trade. And again, you're not buying anything right now. You're just trading. You're just playing a rebound. That could be because we're looking at some positive news to come and we see a relief, short covering in crude oil. That's my thesis right now. So why not just stick to USO or UCO for now? Hey man, followed the morning brief, worked really good. Just wanted to say thanks for all of the knowledge you share. Thank you so much, appreciate it. And with that, folks, let's wrap it up right here. I mean, really good sessions this week. It's going to require us to do a highlight reel for all of the streams that we've done this week. So you can guys have a shorter video to watch and take some notes from the stuff that we discussed. So I'm going to do that this weekend. And we'll be back again on Discord, closing hour in the chat session, folks. Anything that happens, we'll cover it right there. Thank you so much for joining. And those of you who are going to leave us now, have a great weekend. Those of us who are going to stick to the chat session, the closing hour, we'll see you then. And good luck with the rest of the day. Take care.